Welcome. In this video, Xcn coin has started to decline. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
A clear downtrend that has been influencing price movements for a long time is evident on the chart. This trend is represented by a classic descending trend line commonly seen in technical analysis. This trend line has acted as resistance during every price rally attempt, symbolizing the dominance of sellers in the market and consistently pushing the price downward. Such structures hold significant importance in technical analysis, as a trend line represents not just price direction, but also the psychological balance of the market. The current market structure is characterized by a series of lower highs and lower lows, clearly indicating a downward trend. Every new rally attempt ends at a lower level than the previous one, which is a clear sign that buyers have not yet gained full control of the market. Sellers, on the other hand, reassert their dominance at every peak, maintaining pressure on the market. However, downtrends do not last forever. Every trend eventually breaks or reverses. At this point, the most critical factor is how the price behaves as it approaches the descending trend line. Currently, the price is trading very close to this trend line that represents the prevailing downtrend. This proximity is highly significant from a technical standpoint because the more frequently the price touches or nears this key resistance, the higher the likelihood of a breakout. Breaking the descending trend line is not just about the price moving above the line, it also signifies a shift in market psychology. This trend line is the stronghold of the sellers. If the price manages to break through it, sellers retreat and buyers gain confidence. Therefore, a trendline breakout is a powerful technical signal indicating a shift in market momentum in favor of buyers. And right now, we are on the verge of such a breakout. If the price succeeds in breaking above this descending trend line, it will be interpreted as a trend reversal signal from a technical perspective. This would mean that the market is not just in a correction or consolidation phase, rather a new uptrend may be about to begin. This scenario presents a valuable opportunity for investors because the early phase of a trend often carries the highest profit potential. Along with this breakout, other technical indicators may also start to give positive signals. At this point, what matters is not only whether the breakout occurs, but also whether it is supported by volume, because breakouts without strong volume often prove unsustainable and can turn into bull traps. However, a breakout accompanied by high volume is seen as a legitimate and widely followed move, which greatly increases the odds of sustained upward price movement. In the event of a breakout above the descending trend line, several new resistance levels can be targeted technically. The first target is typically the nearest horizontal resistance around the breakout area. If this level is surpassed, previous highs may be tested sequentially. Each resistance level that is broken contributes to increased bullish momentum. In other words, the price not only breaks a trend line, but also establishes new momentum and a sense of confidence. This psychological shift may prompt previously hesitant investors to re-enter the market. In the current situation, the fact that the price is very close to the descending trend line suggests that we are at a technically critical point. If the price fails to break this level and gets rejected, the downtrend may continue for a while longer. However, each contact with the trend line shows that it is weakening and getting closer to a potential breakout. This tells us that a breakout is becoming more likely with each attempt, as if the price is preparing to break out, and when that preparation is complete, a new wave of upward movement may be inevitable. At this stage, it's crucial for investors to be cautious and prepared, because once a trendline breakout occurs, the market often changes direction suddenly. The candles that appear right after the breakout can be sharp and fast. This creates a disadvantage for latecomers. However, those who analyze the technical setup in advance and position themselves accordingly can benefit most efficiently from this rapid rally. In conclusion, the descending trendline currently observed on the chart represents a period of downward pressure and seller dominance. However, the price has once again approached this structure and appears to be behaving differently this time. From a technical standpoint, if this trendline is broken to the upside, a significant market structure shift could occur. Such a breakout could signal not only the beginning of a new uptrend, but also a positive shift in investor sentiment. Therefore, the price action around this descending trendline will play a decisive role in determining the direction of the market in the upcoming period. But we can't make decisions based on solely trends, so let's also take a look at other metrics. Stay tuned.
When closely analyzing the price movements on the chart, a clearly defined and highly critical bullish order block zone can be identified just below a notable level. In technical analysis, this structure represents areas where institutional investors typically position themselves and exert influence over market direction. The fact that the price previously reacted strongly upon reaching this zone is the clearest indication that this area serves as a strategic support level for market participants. Bullish order blocks are typically zones where a downtrend or pullback ends and strong buying activity begins. These areas are where large investors, specifically institutional players, tend to accumulate positions heavily. Therefore, these zones should not be viewed as ordinary support levels, but rather as deep liquidity areas with the potential to reverse the market direction. These levels are often characterized by high volume, sharp price reactions, and frequently serve as the origin of previous bullish moves. In the current chart structure, the price clearly found support when it previously reached this bullish order block, launching a strong upward trend from the low created there. This movement attracted not only short-term traders, but also medium and long-term investors. The effectiveness of order blocks serves as a strong signal for predicting the market's next move. The importance of such zones in technical analysis comes from the fact that when the price previously entered this area, institutional investors executed significant buy orders. These purchases pushed the price upward rapidly and helped restore market confidence. Now, as the price approaches the same zone again, there's a high probability that these institutional players may become active once more and drive the price up again. Therefore, if the price revisits this block, a similar bullish reaction is to be expected. Technically, bullish order blocks are often characterized by the last bearish candle in a down move. Although this candle forms during a decline, the strong buying reaction that follows transforms the area into a liquidity pool. This indicates that the zone is rich in liquidity and a place where buyers may re-enter the market. If the price touches this block again and holds, it confirms that buyers remain active and that the overall market trend is still upward. Additionally, these blocks not only indicate potential direction, but also identify points where momentum may return. The price may consolidate temporarily within the block, but can quickly reverse upwards due to accumulated buying orders. This creates new buying opportunities in the eyes of many traders, who often place limit orders in these zones. When a previously effective reaction zone holds again, it builds strong confidence in the market. Currently, the price is moving toward this order block, creating an impression of a pullback. However, this pullback should be viewed not as a negative signal, but rather as a healthy correction. No market moves upward continuously. These corrections are necessary for the price to reach higher levels. Therefore, this move toward the order block can be interpreted as a reaccumulation phase before a new rally. When the price reaches this area again, the most important signal for traders and investors is how the price reacts. If there is another sharp upward move like before, it will indicate that buyers remain strong and that the block is still valid. Combined with supporting signals from other technical indicators, such a reaction can provide strong upward momentum for the market. In this context, a bullish order block is not just a technical level for the price, but also a strategic area where buyers are likely to re-engage. Price behavior in such zones is extremely valuable for modeling future market scenarios. If the price reaches this area again and shows a strong reaction, it will signal not just a short-term bounce, but also the strengthening and continuation of the bullish trend. For this reason, the bullish order block should be considered an important reference point in investment decisions, and careful analysis is needed as the price approaches this zone. A reversal from this level can offer investors significant profit opportunities.
One of the most notable technical elements on the chart is the descending trend line on the RSI indicator, which has been in place for quite some time and has played a decisive role in the market's momentum. This structure emerged as RSI values consistently formed lower highs, signaling internal market weakness, a lack of momentum, and a loss of strength among buyers. However, recent developments indicate that a significant technical breakout has occurred on this descending structure, and the effects of this breakout have started to reflect in the price chart as well. RSI is one of the most widely used momentum indicators in technical analysis. It not only shows overbought or oversold levels, but also provides highly functional tools for confirming trend direction, identifying early trend reversals, and spotting hidden or regular divergences. Especially trend lines drawn on the RSI can reveal structures that are not visible on the price chart. For this reason, trends on the RSI can often signal earlier than traditional price trends and save time for traders. Looking at the recent RSI chart, there's a clear descending trend line formed by a series of lower highs. This line has acted as a resistance during every RSI recovery attempt, serving as a psychological barrier that has limited price growth. However, this descending line has now been broken to the upside. This is not just a reversal on the RSI, it's also a strong indication that market momentum is beginning to shift back in favor of the buyers. A breakout of the descending trend line on the RSI is considered a very bullish signal in technical analysis. It shows that momentum is no longer moving downward, but is instead developing upward. Such breakouts typically precede price increases by a few steps, confirming the predictive nature of the RSI. In other words, this breakout on the RSI suggests that the price has the potential to start moving upward in the near term. This should not be viewed merely as a visual trend line breakout. Trend lines on the RSI reflect investor psychology and momentum flow. The break of these lines means that buyers are gaining confidence, selling pressure is diminishing, and investors are becoming willing to take risks again. This represents a psychological shift that directly impacts prices. Especially if the RSI begins to settle above the 50 level, it further confirms that momentum is developing in an upward direction. Furthermore, the descending trend line on the RSI, once broken, can become a new support zone for investors. Typically after a trendline breakout, the price or indicator returns to test this line. If the retest is successful, meaning the RSI doesn't fall back below the line, it confirms that the breakout is strong and reliable. This in turn strengthens the price's upward potential. This breakout on the RSI may also signal the end of the downtrend and the beginning of a new momentum phase. Often this implies that the price is emerging from a consolidation period and may soon begin a broader upward movement. Thus, this breakout on the RSI may indicate not only a short-term, but also a potential medium-term trend reversal. In this context, the structural breakout on the RSI is quite significant and should be on every investor's radar. Investors should evaluate such breakouts not just as technical events, but also as psychological transitions. A prolonged downtrend on the RSI typically reflects uncertainty, lack of confidence, and dominant selling pressure in the market. Once this structure breaks, that psychological state also changes. There are now more buyers in the market, and these buyers become more willing to push prices higher. This psychological shift is just as important as the technical breakout. The structural shift seen on the RSI becomes even more meaningful when analyzed in conjunction with key price support and resistance levels. If the price reacts upward from a strong support, while the RSI breaks its descending trend line, the probability of an upward move becomes much stronger. Additionally, this type of scenario often leads to the formation of double or triple bottom patterns at previously established lows, suggesting that a bottom may be in and that the foundations for an upward move have been laid. In summary, it is observed that a long-standing downtrend on the RSI has ended and the indicator has broken its descending trend line to the upside. This technical structure should be considered a strong and early signal that market momentum is turning positive again. Even if the price itself hasn't made a clear breakout yet, a structural breakout like this on the RSI, being a leading indicator, often precedes similar movements in the price. Therefore, investors should give significant attention to RSI breakouts of this nature. These breakouts often precede large price movements. Additionally, trendline breakouts on the RSI provide earlier signals than classical technical analysis structures, giving traders a major advantage in spotting buying opportunities and entering positions early. The current positive development on the RSI indicates that the market holds upward potential and that prices may soon reflect this positive momentum. In other words, if the RSI is broken, a new upward wave may be just around the corner. The RSI trend is indeed broken.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.